Hey guys, what's going on? Welcome into the video. So I believe that we have a massive move coming in the stock market this week, and in this video we're going to talk all about it, including the major technical pattern that is formed, some scenarios, and which direction this move could go, and then go over some individual trade ideas along with that. And as always, there are timestamps in the description. So let's go ahead and get on into it. So taking a look at the NASDAQ, this is the tightest and longest consolidation pattern that we have had in multiple years. So this is 16 days of straight tight consolidation between 313 and 321. Consolidation patterns like this are very explosive and will result in a massive directional move once it does break. So the longer and tighter a consolidation is, usually the bigger move that plays out next. Just for example, a similar pattern to this is like what we saw play out in late December into early January, which was a 10-day consolidation pattern, and once it broke, it resulted in a large 16% upside move from the top of the range. Another example is in June. This was an 8-day tight consolidation pattern, and once it broke, resulted in a 10% downside move in just 3 trading days. And that is just half as long as the current consolidation that is formed. So other indexes like the S&P have the same look as the NASDAQ, though not quite as tight, and there are a few patterns within this consolidation that we can use to potentially front run the breakout or breakdown out of this range. So as you guys know, I like using the S&P chart as the biggest signal for overall market direction. This is the most traded and has the most eyes on it, so technical signals and analysis on this chart will pretty much let you know what is playing out, and other indexes will follow it for the most part. So some important things to note that are playing out right now: every breakout attempt on the S&P to a new swing high has been met with a violent sell over the past few weeks. And what we saw last week starting on Tuesday is a new phase of lower lows and lower highs. Now this consolidation pattern could truly break in either direction, but what it feels like to me right now is that passive sellers are controlling this current trend. So what does that mean? It means that there are some large sellers that are being aggressive at higher prices and not letting this break out, but they are not being aggressive to push this lower just yet. So bearish strategy right now is to exhaust the buyers, reject all breakout attempts, and once buyers get exhausted and a key level breaks on the downside, this can result in a breakdown and a market dump. Now on the other end, what buyers want to do is get above and hold above those higher prices, and if they are able to do so, they can catch those big sellers and shorts off sides and result in a short squeeze to the upside. So the big trigger points that I'm watching to start a directional move is first on the downside, this key uptrend line currently at 41.20 to 41.22. So this is currently key support, and on a break and hold below there, this would start the downside move. On the upside, 41.88 is the biggest trigger point that I'm watching. This is where it topped twice, and the false breakout happened up to 4,200 before selling back down. A break and hold above 41.88 would likely catch shorts off sides and start that squeeze to the upside. So running through a few possible scenarios now, if a breakdown happens, the biggest downside level to watch is at this key trend line where the market previously broke out above. On any breakdown, this level would be a must hold, or a much larger move to the downside will play out. So in the scenario that a breakdown does play out, this is what I'd be watching for. A break and hold below the trend line at 41.20 would start the downside move, and because there is so much built up energy in this range, I would expect that it breaks through the key 4100 level as well. From there, it opens up downside to the trend line we just talked about at 40.55, which is the big spot for a relief bounce. And from there, it could come back to retest 4100 as new resistance, which would be the next major decision point. Either a break and reclaim back above could trigger a false breakdown pattern and see a squeeze back up to the upside, or a strong rejection at that level could send it down to new lows. Something like that would be what I'm watching for on a possible breakdown scenario. So my personal opinion is if this breaks out to the upside, it will either result in a larger false breakout pattern before sending the market lower, or one final swing high before sending the market lower. As we talked about last week, we are coming into bearish seasonality, which has tracked very well this year, and if it continues to track, the market will get bearish from early May to late May. Also, just under the surface, action continues to be unhealthy. Overall market breadth is terrible and worst on record, which means that only about 25% stocks right now are outperforming, and those are mega cap tech stocks and safety plays such as consumer staples, which are holding the indexes up. So if those stocks roll over, we could see a real decline in the broad market once again. So getting back to the S&P chart, if this breaks to the upside next, I would not be surprised to see something like a break above 4,200 before failing back down from there. this would sweep above recent highs and those highs made in January, and then a fail back below would start the false breakout. You'd also see that scenario where one more swing high plays out to where it tops around 42.50 at that major trend line before starting the decline back down from there. Now I could obviously be wrong on this, but overall right now it feels to me that buyers are getting exhausted and a large pullback at the minimum will play out soon. Market breadth is terrible, earnings season could be rough, valuations and rates are through the roof, and more. So before we get into some individual trade ideas, I wanted to talk about the power of the false breakdown and false breakout pattern, which would be my preferred method of breaking out or down from this current consolidation range. So for example, the most recent breakout and leg higher that we had at the end of March was started by a classic false breakdown pattern. It broke below the 4,000 to 4,010 key support before reclaiming back above, which trapped the shorts that chased and triggered the false breakdown once it reclaimed back above, starting a 170 point move to the upside in just 5 days. And another one back in October, which actually marked lows for this bear market. It broke below the 3570 key support, trapped all shorts that entered below there, and once it reclaimed back above was off to the races to the upside from there. And the same exact thing can play out to the upside, such as these two scenarios back to back. Breaking above a key resistance before failing back below, it traps all buyers that chase the breakout and ends in a violent sell. And because there is so much built up energy in this current consolidation phase, if we were to see a false breakout or false breakdown pattern like that, it is going to result in an absolute massive move. There aren't many major economic catalysts this week, but there are some important earnings to pay attention to that could dictate the next market direction. So this week includes Microsoft, Google, Visa, Meta, and Amazon as the most important. Pretty much all of these have rallied higher into their reports, which does increase risk of a sell the news event, especially if there are any surprises such as lowering guidance. Things could get ugly real quick. So now getting into some trade ideas for the week ahead. Let's start it with Apple, and this is currently sitting at a key trendline resistance, and this is set up in a larger rising wedge pattern. So Apple is obviously the largest holding in the major indexes, and this pattern is a big reason why I lean bearish on the overall market right now. So if this does play out, it'll play out something like this and start a substantial pullback leg for the stock. Another very close watch for me is the Semiconductor Sector, ticker symbol SMH. We talked about this setup last week as it's testing the bottom of the rising wedge along with the 50-day moving average. If it gets a confirmed move below there, this is set up for a substantial pullback in my opinion, and personally would expect to drop to around 230 to 233.75 support zone next. Along with this, some major holdings in the semi ETF is AMD, which is currently testing this 50-day moving average along with the 88 to 89 previous breakout zone. A break and hold below there would start continued downside to 85 to 85.56, and then 79 next below there. Another one is Nvidia, which is one that I've personally been very bearish on at these prices, as it is trading for a disgustingly high valuation here. It's currently in a large consolidation phase and failed a few breakout attempts, which makes this likely to be a distribution top in my opinion, and downside can start on this one with the break and hold below 263.5. And one more is Qualcomm, which is currently set up in a bearish head and shoulders pattern and clinging on to trendline support. A break and hold below the trend line here can start the next leg lower for this stock, with levels below at 110 and then 100 to 102 below there. So that is everything I'm watching for in the week ahead for the stock market. Within this major consolidation pattern, we're going to see a major move one direction or the other. It's just a matter of when, which will most likely be this next week in my opinion, and which direction, which we will see how it plays out there. Thanks so much for watching, guys. I greatly appreciate it. For anybody interested in joining the private Discord chat, that is the first link down in the description. You get my personal trade alerts, nightly watch lists, and I answer any questions you have in there. And I will catch you all next time. Make sure to like and subscribe if you have not already. And I will catch you next time. Peace out.